Hello everybody and welcome to another video of DIY investing. The S&P 500 has now broken out of its bear market. Not only was Bitcoin and the S&P 500 very correlated, but they were both inside of a one-year bear market. Now that Bitcoin is broken out, the S&P 500 is now breaking out. This is the confirmation that we needed to prove that the bottom was in, to prove that the bear market is over, and to ultimately cement ourselves into the next higher highs as we break out and go into another massive bull run. People that are prepared right now before this takes place are going to set themselves up to make a financial fortune. And for today's video, I'm going to be breaking down the most important charts, the ones that you need to pay attention for so that we can all go about capitalizing on the move ahead. Thank you guys so much for tuning in. And with that being said, let's jump right into this amazing video today. Alrighty guys, now before we jump into any major Bitcoin analysis, we're going to touch up on what is taking place into the stock market. Now first things first, I've been drawing this chart for a long period of time because it's been super important that we ultimately break outside of this downtrend. This has been the S&P 500 since we peaked at about January the 4th of 2022, and we've been inside of this downtrend ever since. Bitcoin is highly correlated to the stock market, specifically with the S&P 500, because the S&P 500 pretty much makes up risk investments. Inside of the stock market, we have the conglomerate of all of the best 500 companies inside of the stocks, and all of these companies are viewed as more of a risky type of investment. And so with Bitcoin being what's viewed as the riskiest investment of all, it actually correlates highly with the S&P 500. And what we've seen is ever since the S&P 500 topped, Bitcoin has been topping as well, and they've both been parrying each other inside of this bear market. Now, it was over here at about October of 2022 that the S&P 500 finished its all-time low inside of this bear cycle. And from that point, we rallied all the way back up to about 4,100, and we hit our downtrending resistance once again. Now, one of the early signs that was telling us that, hey guys, the bear market could really be in, or at least we're getting very close to that, was how, if you notice here, every time we hit this resistance, we had a massive drop. This one was a massive drop. This one was a massive drop. But over here, we bounced off of this one 2 times. We had 2 different attempts at trying to break out of this. And the production of the sell-off was only this move right here. We never even made a lower low. And then we came back up, retested this once again, and every single time we actually retested this, the sell-offs were getting weaker and weaker. And what that was telling me was that there's actually a lot more buy support than there ever has been prior to this point. And a lot of that has to do with the Federal Reserve. The Federal Reserve has really done a phenomenal job over the last 6 months of tampering inflation, of ultimately getting that inflation at a lower level. And as we're getting closer to this next month, what everybody is kind of speculating on is that we're only going to be looking at a 25 BPS hike. So it's going to be a very small rate hike. It's not going to be super big by any means, and this is going to be actually half as much as the 50 BPS that we were experiencing throughout this period and this period all over here. And so as they're getting a handle upon this inflation, as they're starting to get focused in on this next bull trend, the stock market is ultimately seeing upside, and now we have confirmation that the bear market is in. I wouldn't say true confirmation just quite yet, but we are outside of this descending resistance for the first time ever. We have been rejecting off of this lower lows and lower highs throughout this entire bear market, and for the first time ever, we have now broken outside. And so as long as we can continue to hold support outside of this descending resistance, in my opinion, the bear market bottom is in. The bottom has technically been in since October, but for us to actually be breaking outside of this downtrend, that is the confirmation that the bear market is over. Now guys, if we can hold support above this level, I wouldn't be surprised to see us rally upwards of 4,100, and then from there we'll probably see a pullback. But as long as we're holding support above this descending resistance now as support, then that's going to set us in for a much bigger move upwards of 43 and potentially even 4,600. We're just going to have to take it level for level. We don't know exactly how long it's going to take before we're actually breaking out and heading back up to those all-time highs. But based off the way Bitcoin looks inside of our cycles, we know that most likely the rest of this year is going to be us re-accumulating, building a support floor and a foundation, awaiting for 2024 and 2025 to be the real expansive moves inside of this new bull trend. And so with the S&P 500, most likely Bitcoin's going to continue to follow along with what this does. I'm not expecting that this is just going to immediately rocket straight back to those all-time highs, although it is a possibility that we can watch out for. I would expect that as buyers are stepping back into the market, as we're ultimately seeing what the Federal Reserve is going to do, we're just going to have to watch level for level, and once we hit these levels, we would expect to see short-term pullbacks. You know, at the end of the day, anything can really happen, and the better that the S&P 500 starts breaking out, the more bullish momentum it has, the more bullish momentum that Bitcoin will have as a whole. Now, the earliest sign that the bottom was in was when the Dow Jones broke out. The Dow Jones broke out here in November, and that was pretty much the bottom for Bitcoin. And so we actually can see that while the S&P 500 was still lagging, like I stated, guys, the S&P 500 is viewed as more of a risk-on investment. This is taking the top 500 companies inside of the equities, and those are going to be risk-on type of investments. And so Bitcoin syncs up with the S&P 500. The Dow Jones is a lot more of a stability type of industrial average, and so this one breaking out first made a lot more sense. And when we were flipping this as support, keep in mind that the S&P 500 pulled back after a rejection from descending resistance, but the fact that the Dow Jones was holding above trending support, or I should say above trending resistance, now acting as support, that was what really gave buyers the signal to, hey, step in here, start accumulating, because most likely the low is in. And that's pretty much what we've seen up to this point. When the stock market pulled back, I should say when the S&P 500 pulled back, the Dow Jones also pulled back, but this just pulled back to trending support. Nothing really changed here. And now that the S&P 500 is breaking out and the Dow Jones has already cemented us in the breakout of this downtrend, in my opinion, this is going to be setting us up for a much bigger move to the upside. I think that there could still be quite a bit of consolidation here. You know, the Dow Jones could come back down here like this, but once the Dow Jones moves outside of this consolidation, we would be expecting a move upwards of 35 to 3,600, and really, you know, the all-time high is at 3,700, so it really won't be that far off. I would expect that as the Dow Jones has kind of led the charge thus far, I would expect that it would be the first one to come back and retest those previous all-time highs. And then once the Dow Jones starts doing that, the big thing here, once the Dow Jones can really break out and make a new all-time high and get a strong push outside of those prior all-time highs, that's where we're going to start seeing the S&P 500 really start to shoot back up to its previous all-time highs. We should expect to see, in the same way that the Dow Jones has led the charge thus far, we would expect to see that it's going to continue to do so. Once the Dow Jones breaks those all-time highs, in my opinion, a lot of confidence is going to come back into the S&P 500, and we should see a quick move back to those prior all-time highs, ultimately leading us into a breakout of that move. And inside of all of this, guys, this is going to be positively impacting Bitcoin. As long as the S&P 500 is performing well, Bitcoin we would expect to also perform well. Now what we're going to be looking at here inside of the Bitcoin chart is this 30 MA. And the 30 MA on the weekly time frame has been the most valuable trend indicator, in my opinion, that we have. You're not always going to nail the exact bottom. You might not nail the exact top of each cycle, but it's such a solid trend indicator that this is going to tell you when the true bottom is in and when the true bear market is over, or when the true cycle top has started. And we can see that since the very beginning of Bitcoin, which, guys, if we come down here, hopefully my camera's not blocking it, TradingView actually updated this, and so we can actually see the entire price history of Bitcoin. Prior to this point, our price history was this right here. And now we've actually got an updated list of data, and we can actually see that what Bitcoin was doing when it was worth, you know, less than a penny. And this is actually the entire price history of Bitcoin now up to this point. And so we're going to be taking a look at this 30 MA because this is the most important trend indicator that we have. We can see that throughout every single one of our cycles, no matter how volatile, no matter how much more liquidity we have, this has been proven to be our important indicator for determining where the trend of Bitcoin is at. Throughout our first cycle, we were holding this as support. Once we actually flipped below the mean of this point, that became our bear market. We reverted back up to the mean, which was ultimately the 30 MA. And once we actually reclaimed this MA as support, which, let me change the color of this real quick to a red so it's a little easier to see. Once we actually reclaimed this MA as support, that was our signal that the bottom was in, the bear market was over, and we've seen, once again, the same trending all the way up. Now, at the top of 2013, we corrected back down. Once this moving average became resistance, that's really what confirmed the bear market to be in, and that's what led us for our massive capitulation going from $600 all the way down to about $170. back all the way in 2015 to 2016. Once we reclaimed this as support, we really just consolidated all the way along this entire trend. We do distance ourselves from this, but as you guys can see, this is a very important trending indicator for Bitcoin. In the 2018 bear market, once this actually started acting as resistance, that set us in for the majority of that bear market decline. And so as it stands today, let's remove these drawing tools. Let's come over to where we're at today. As you guys can see, for the first time inside of this cycle, we have actually broken back above the support of this descending resistance, or I should say the 30 MA. We can see that once we topped at 69,000, we made our first decline back down to 33. We actually retested this as resistance here at 50,000, and that's why we actually ended up seeing the biggest part of our bear market decline happen after a rejection of this moving average. There's a lot of smart money that actually watches this moving average. I wish I would have actually known about this before, but I've been following along with it throughout this entire consolidation, and that's why I'm bringing this to your attention now, because for the first time ever, inside of this bear market, we are now trending outside of this moving average, and it's now going to be acting as support. And so now the big question is, how high are we going to go before Bitcoin sees a correction? And as it stands now, what I was watching for in the shorter time frames, which let's actually dive into these a little bit. Let's go to the daily. Let's go down here. What I was personally watching for, if we're looking at our Elliott wave count, I was looking for a correction to be happening. When we actually hit this move up to 23,000, I was expecting that we were going to see a correction back down, and it would look something like this. A, B, C. All the way back down to about $20,400. That's what I was watching for, and as it stands right now, if we jump into an even shorter time frame, Bitcoin has actually bounced off of this support, and we've got a strong buyback, and we're now looking like we're going to get one more high. What I was looking at this move was something like this. I was looking at this being a 1, 2, 3, 4, and 5, and then we were ultimately going to see a deeper correction, A, B, C, back down to about 20,500 or so. Now, we've actually seen a decent buyback, and with the S&P 500 breaking out of this downtrend, the way it looks, I really wouldn't be surprised to see this ultimately be a 1, 2, 3, 4, and we still need one more impulse to the way up before this move is actually over. And so it doesn't necessarily matter so much. If we get one more move, I would be expecting us to rally upwards of the August highs at our range high up here between about 24,000 and 25,000. And so once this move is completed, whether it's 24, whether it's 25, I don't really care so much. We do have a very clear completion of 5 waves up, and this is also going to be the completion of a big picture wave 3. This is our wave 1, this was our wave 3, and we're working on wave 5 of 5 right now. Let's make this a little bit bigger. Let's go with minute, minor. This is kind of what I'm personally watching for right now. We're in the process of completing a big picture wave 3. 1, 2, 3, 4, and we're working on our subwaves of wave 5 of 5. And so this is kind of what I'm watching for, guys. Once we ultimately finish in a massive top right here from this big move that we saw, I would expect to see a correction back down to about $20,500. And from that point, what we'd be looking at based off of Fibonacci, depending on where we top. Keep in mind that this could go anywhere from this point. Wave 5 of 5s can get extended. They can also be a little bit short-lived. It's not like there's some golden level that they have to hit for them to be confirmed. This thing could literally rally just barely above wave 3 and be completed at that point. And so it's not like you should be expecting that we have to hit some certain target. We should expect to see a correction fairly soon though. And so whether we rally to 24, whether we hit 25, I would be expecting a deeper move back down to, depending on how high we go. If we rally upwards of 25,000, I wouldn't be surprised if we ultimately topped or bottomed around here at the 382 level, because that's a pretty common level for a 3-wave cycle top to correct back down to in a wave 4, right? So I'm sorry if that doesn't make as much sense. What we're looking at here, this is wave 1 of 1, and we're working on wave 3. Inside of wave 3, we finish wave 1, we finish wave 3, and we're working on the completion of our wave 3 right now. After this cycle top is done inside of this big picture wave 3, we will expect to see a wave 4 consolidation. This will be our wave 4 correction. We could go to the 382. We could also come back down to the 0.5. we technically could come all the way back down to the 618 depending on how deep of the sell-off goes. But based off this being our first major breakout into the new bull trend, I wouldn't be surprised to see this hold support at this 382 level, which would also be the top of the resistance right before the FTX collapse. And then from that point, we would still expect to see one more bigger impulse of a wave 5, and then that would be the completion of not only wave 1, not only wave 3, but then also wave 5 on the way up. And that's the thing, guys, inside of this wave 5, we could expect to see this thing get pretty extended. Like I stated, a wave 5 can be a short one. We might just make a little move above our wave 4, or this thing could get massively overextended. And one of the examples we have is back down here in 2019. I'm going to actually remove our 30 MA, and we're going to talk about this. Inside of this move over here, this was our wave 1, this was our wave 3, and then this was our wave 5. And so both wave 3 and wave 5 were pretty big, but this was a massive extension inside of our wave 5. And inside of wave 5, what you're generally going to see is a blow off top. And so notice how there's virtually no pullbacks all the way up to this move. And then once we actually start crashing from that point, we have a really deep correction that comes all the way back down nearly onto support of the top of wave 3. And so this is kind of what I'm going to be watching for inside of this move. Keep in mind, guys, that we've already finished wave 1. We're in the finishing touches of our wave 3. We'll get a wave 4 correction, which will be a good opportunity to get back in. Maybe look for some leverage long opportunities, but only if you set a stop loss. Don't forget that point. And then we would expect to see one more wave 5 before this is over. Where it stands for me, what I'm looking at, I really wouldn't be surprised to see this rally upwards of about 30K, and I would really say about 32 to 33,000, or the top of this move over here. That's kind of what I think is going to be playing out. I think that this wave 5 will take us upwards of about $30,000 to $33,000, and it'll look something like this. Like I've stated many times, what we look at inside of our big picture, after every single completion of the bear market, we have our bear market decline, and then what ends up happening is we revert back to the mean, right? The mean is just the midpoint from the range high to the range low of the bear market. Now, every single time we have done this, the only time that we didn't do this was actually inside of our 2018 and 2019 cycle, where our mean was pretty much here at about $6,500, and we actually overextended from that point. But as a rule of thumb, the way that we actually revert into the new trend is us going back into the midpoint of our range. So the midpoint for us is going to be around $30,000 to $33,000. And keep in mind, guys, if we get a deeper move like what we saw over here in 2019, we could extend higher. And if that was the case, I would be expecting a move upwards of about $40,000 to $50,000, and it would be something like that, right? And so the bigger the move to the upside, probably most likely what happens is a bigger correction to the downside. And so if we get a move up to 30K, I would expect a move back down to about 21,000, or potentially we could go all the way back down to about 19.5. I wouldn't expect us to go lower than that move. Let's actually remove these drawing tools so it's easier to see, and let's pull up this 30 MA and talk about what we could see here. Now, keep in mind, guys, that once we do end up getting this 4-wave correction, I would expect that whether we top at 24 or 25,000, I would expect that we would come back down and get fairly close to retesting this 30 moving average, which is going to be right around $20,000. And so from that point, we would expect to see one more impulse back up. And then from that point, I would be looking at a cycle top around $30,000 to $32,000 or $33,000, roughly right up here. And then from that point, once we do get our deeper decline after we've put in a wave 1, after we've put in a wave 3, and we've put in a wave 5, we would be expecting a much longer consolidation as we ultimately resort back down to the low point of this range, retesting some of these prior resistance levels that now need to hold as support. And I do believe that this 30 moving average is going to play a key factor and a key part in moving forward into this new bull trend in the exact same ways that it has up to this point. As we can see throughout all of our cycles, once we actually reclaim this 30 moving average, we always hold it as support throughout this entire duration up. And so any sort of correction that we expect, or any sort of correction that we see, we would expect to see us hold support above this moving average. The only time that we didn't hold above this moving average was back inside of our last cycle, and that was leading up into our COVID capitulation. But as a rule, we were pretty much right here hugging this level throughout the entirety. Even when we actually went below it over in this period, we had a black swan event leading into COVID, which ultimately saw us make a massive move to the downside. But once we actually bottomed from that point, we reclaimed this level, and then that's what set us in for that big push upwards of $65,000. And so it's not going to be perfect. We will expect to see variance and deviance from this. It was perfect up to this point, but into our last cycle, this proved that, no indicator, no matter how many times it's played out in years past, the more times it plays out, I would say the less likely it is to continue to play out, because the market is always doing the most unexpected thing. Every single time everybody thinks something's going to happen, it usually does the opposite, which is why I've actually wanted to make it clear that one of the things that we were watching for in all of our prior cycles was actually the 4-year cycle low. We can see that throughout our last 2 bear markets, the 4-year cycles were playing perfectly up to this point, and we've actually seen the same exact thing happen once again. And so when it comes to, how this cycle is going to look, I would say that the fact that so many people are watching for this 4-year cycle means that we should be a little bit more cautious around the 4-year cycle than what we were in years past. And the reason I say that is because even though we have bottomed and we have cemented in our bear market low, and it did happen exactly on path with our last 4-year cycle, I would say that there's 2 different scenarios. Scenario 1 is we continue to follow another 4-year cycle, which means a 3-year bull trend, something like this. And then we ultimately lead towards a cycle top at the end of 2025, similar to what this cycle was and similar to what 2017 was. Or one other thing is called a left translation. And a left translation is a little bit different. It would actually mean that we have a much bigger move to the upside. We actually start front running the prior cycles, and where this was 3 years up and this was 3 years up, we would actually see an impulse leading towards a cycle top that would happen 18 to 24 months from our cycle low. So it would actually be 1.5 to 2 years long worth of a bull trend rather than 3 years into this bull cycle. And so that's something that can happen. And what's interesting to me is the fact that this could happen because of the fact if we look at our big picture Elliott wave count, what we're looking at is a 1, 2, 3, 4, and it's looking like this next cycle is going to be a big picture wave 5. And what's likely to happen inside of a wave 5 is a massive overextension. If we actually come down here, like I stated inside of these points, the wave 5s that happen are usually very, very parabolic. There's almost no pullbacks that happen, and they're a much more euphoric type of consolidation. And we can come all the way back down to 2017, and really all of the cycles for that matter. We can see that over here for Bitcoin, our wave 5 in 2017 was this move right here. Look how overextended it gets. A wave 5 is known as being a very important cycle because usually the pullbacks are far and few between, and there's almost just no pullbacks because it's a very euphoric time. It's what's known as a cycle top. It's a blow-off top. All of these different factors come into play. And so if what we're looking at here is a big picture wave 1, a big picture wave 3, and our next cycle is going to be a wave 5, I really wouldn't be surprised to see this next cycle actually front run prior halvings, especially because of the fact so many people are actually watching the 4-year cycle. A lot of people are going to be expecting another 3-year bull run because of the fact for the last 10 years of Bitcoin price history, that's what we've done. We've had 1 year down, 3 years up, 1 year down, 3 years up. And so because of this pattern that's become so obvious to so many people, I wouldn't be surprised if this next cycle we get a deviance from that point. And so there's a couple different things that we can have happen. And if you guys want to learn more about how left translations work, I highly recommend that you guys go and look up Bob Lucas. I will actually link his channel in the description for you guys to go and find him because he's actually the person that I personally learned about 4-year cycles from. I learned about 4-year cycles all the way back down here at the low point of our 2018 bear market. And that's the reason why I was so adamant about teaching everybody else how the 4-year cycles work. And so because we've actually followed along with another 4-year cycle, there's really only 2 things that are going to happen. Number 1, we make another 3-year bull trend just like all of our other 4-year cycles. Or number 2, we front run our prior bull cycles, and instead of seeing 3 years up, we see about 18 months to about 24 months up. And so we'd be looking at about 1.5 years to 2 years up instead of a true 3-year up, 4-year cycle. So I hope that makes sense. If it doesn't make sense, like I stated, go check out Bob Lucas. He's a phenomenal analyst. He's been analyzing these markets and these cycles for a number of years. He's the smartest guy that I personally know when it comes to analyzing cycle timeframes, and he made a recent video talking about this potential. And so this is kind of the video I had for you. There's a lot of things to look forward to. Like I stated, stocks are breaking out. The Dow Jones is breaking out. Bitcoin is breaking out. Now that we're at this point, I think it's very important that, be prepared for a short-term correction. That short-term correction will be a good buying opportunity because, like I stated, I think that we're going to be headed upwards of 30K before this move is over. It won't be, in my opinion, as big as 2019, but it'll be a big move nonetheless. There's a lot of profit to be made, and then from that point, I would be expecting a re-accumulation throughout the rest of this year, heading into 2024, and are having in midpoint of 2024. Anyways, guys, thank you so much for the support. If you found value in this, make sure to do me a favor by leaving a like, comment, and subscribing. If you guys want to actually follow the trades that I take, I've been posting a ton of signals inside of the Discord. There is a ton of profit to be made, a lot of low caps, mid caps, and even high cap signals, but the majority of our profits have been made inside of mid caps and low caps. A lot of those trades have taken off in a big way. So if you guys want to see how I'm personally diversified, what different low caps that I'm trading, looking for some big winners inside of your own portfolio, links are in the description to go ahead and sign up on my website. I appreciate the support so much, and I look forward to seeing you guys make a ton of profit, especially as we head upwards of 30K over the next couple months. Thank you so much for tuning in, and with that being said, I'll catch you in the next one. As always, peace out.